Wall Street snaps 4-day winning streak as the U.S. labor market shows signs of slowing down. Higher oil prices and the potential impact on the economy too weighs in the market. Tepid cues from Asia as major markets of China, Hong Kong and Taiwan are shut for trade. The adjusted SGX Nifty is indicating a slightly higher start for the Indian market. Precious metals surge, gold rallies to over $2,000 an ounce as the U.S. economy shows signs of slowing down. Crude flat in volatile trade as investors weigh production cuts along with weak economic data from the United States. The two-day Monetary Policy Committee meet is underway. 90% of participants in a CNBC-TV18 poll see rates being hiked by 25 basis points on Thursday, with this being the last rate hike of the current cycle. Debt mutual funds with a tenure of over 3 years see big inflows in the week ending 31st March. Gilt funds see AUM rise 19%. Corporate bond funds grow 8% as debt mutual funds see churn over the end of indexation benefits. HDFC Bank sees deposit growth at an 11-quarter high. IndusInd Bank's loan growth hits a 15-quarter high, while Bajaj Finance too reports strong AUM growth. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. A fresh new day. We come back after a holiday, so a lot to catch up on. But first up, as always, let's take a look at what the Asian markets are doing. Now, remember, most of them are shut for a holiday today. We have the Taiwanese index, which is shut. Hang Seng too is shut in trade today. But if we look at the other markets, after the negative cues that we got from the US markets, most of them are in the red. Nikkei being the biggest loser, down 1.5%. Let's get the SGX Nifty up for you because that is something that will indicate the moves for our own market. Now, since we were shut for a holiday yesterday, it's important to adjust it with the Nifty 50 futures. While optically it is indicating that it could be a downtick, but if we adjust it for Nifty futures, it is actually an uptick. It will be higher by around 40 points on the SGX Nifty. A slightly green start is what we are expecting as far as Indian markets are concerned. So let's talk about the US markets now because Wall Street ended yesterday's session lower. The Dow Jones closed with a cut of almost 200 points while the S&P 500 fell by more than 0.5%. The tech-heavy Nasdaq, the index fell by more than 0.5%. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
Markets slipping on Tuesday as traders assess the impact of spiking oil prices on the global economy. The Dow ending down almost 200 points lower, shares of Caterpillar weighing on the index. The S&P saw its first decline in 5 days, finishing almost 0.6% lower, and the Nasdaq down slightly above 0.5%. The Labor Department reporting job openings fell below 10 million in February for the first time in nearly 2 years. That could be a sign the Federal Reserve's efforts to cool the economy are working. Today's reading comes ahead of Friday's monthly jobs report, which investors will be watching closely. And JP Morgan Chase CEO Jamie Dimon striking a slightly upbeat tone in his annual letter to shareholders. Dimon saying that while the current banking crisis is not over, he said that he's optimistic about the U.S. economy. Dimon added that the recent events in the banking industry are nothing like what occurred during the 2008 global financial crisis. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that update. So let's stay with the U.S. markets and listen into some comments coming in from Anastasia Amoroso of iCapital.
Well, I think it's some consolidation after a stellar rally that we had last week. Job openings, we also got the manufacturing report that disappointed somewhat, and then the GDP was tracking 3.2%, now it's tracking 1.7%. So, that is kind of the cause for consolidation, but that still doesn't deter me from saying that I think we can have a more positive tone to April, because if you look at the broader picture, we sort of have the recipe for a soft landing, which is inflation expectations are coming down, and broadly speaking, economic data is surprising to the upside. So that actually still supports the resilient stock market. I think we are just about to be done with tightening. And if you think about how stocks perform, they don't perform well during the tightening phase. But what happens after tightening is sort of this relief that is to say, okay, we may be done with the rate increases. That's behind us, but the economy is not weak enough. And I think that's where we're sort of headed. I think the second order effects do come to roost, and that's what eventually causes a recession. So I don't think we're in that scenario now. And the banking turmoil for now, to me, is contained, if not all the issues have been fully solved there.
Okay, that's the US market outlook. Let us get you the final update on our global market wrap this morning. Mixed cues coming in from Europe with the French CAC absolutely flat, the German DAX up about 23 points and the British FTSE closing 38 points lower. Credit Suisse held its final annual general meeting before the company's takeover by rival UBS. The chairman of Credit Suisse, Axel Lehmann, said he was truly sorry for the collapse of the bank. Speaking on the merger with UBS, he said, and I quote, "Until the end, we fought hard to find a solution, but ultimately there were only two options, deal or bankruptcy. The merger had to go through." Okay, all right. With that, we will move on. We've spoken about the global market action, a lot that has happened there yesterday. But how will these cues impact our own markets? We come back after a holiday and it is a truncated week as well. We have our research team joining us to tell us just that, what's the trade setup looking like and the stocks that are likely to be in the news as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. As you mentioned, it's a truncated week. So yesterday we were off, and even Friday, markets are closed. In fact, it's not just us. Even rest of Asia, there are truncated weeks, especially as far as China as well as Hong Kong is concerned. As you mentioned, overnight cues. The U.S. markets, after 4 straight sessions of gains, saw a bit of a cooling off of profit booking at higher levels. So all of the U.S. indices ended marginally lower, and mixed cues coming in from Europe as well. As you mentioned, marginally lower is the kind of handover you could see as far as the European markets were concerned. Now, coming to crude oil prices, this is going to be key to track going forward, given the fact that day for yesterday you saw a very sharp rally as far as crude oil prices are concerned. Yesterday, they built onto gains, but marginally higher. So Brent futures now trading closer to the $85 a barrel mark, and WTI futures closer to the $80.7 a barrel mark. Now, when you talk about Indian markets, while we were closed yesterday, a last hour rally on Monday actually took Indian markets much higher. And when you're talking about the key constituents to keep an eye out for today, given the fact that there are so many updates that have come in terms of quarterly updates from banks, the banking index, the Nifty bank index would be key to watch out for. Also key to watch would be the RBI MPC meet outcome that is also anticipated. And when you're talking about Asian markets, slightly mixed cues, quite a few markets closed today. SGX Nifty on an adjusted basis is indicating a slightly gap up opening as far as our own markets are concerned.
Okay, all right. Thank you so much, Vivek. So that's the market setup for today. Slightly a green start for our own markets. Let's talk about individual stocks now. Surbhi is joining us with that list. Hey, Surbhi.
Hi, good morning. We will be watching out for a whole host of stocks that came up with their Q4 business updates. Let's start with HDFC Bank first, where the deposits were up 21% on a year-on-year basis and up 9% sequentially. The advances were up 17% on a year-on-year basis. Next is Bajaj Finance, where the new loans were up 21% and the customer base was up 20%. Federal Bank, they reported the best business momentum in the last 14 to 17 quarters. The deposits were up 17%. M&M Finance, the business assets were up 27% on a year-on-year basis. Other banks that had come up with their Q4 business updates were IndusInd Bank, Suryodaya Small Finance Bank, South Indian Bank, Bandhan Bank and AU Small Finance Bank. Marico also released their business update where they said the India business saw some volume growth on a year-on-year basis. The international business growth was strong with mid-teen currency growth, and overall consolidated revenue grew in low single digits. Vedanta released their Q4 update. Their aluminium production was flattish, up 0.3%, and the mined metal production was up 2% on a year-on-year basis. And lastly, Cyient will also be in focus as they rejig their top leadership positions. They appointed Krishna Bodanappu as Executive Vice Chairman and Managing Director, who was earlier the MD and CEO. They also appointed Karthikeyan Natarajan as Executive Director and CEO, who was earlier the Executive Director and COO. And they also appointed Prabhakar Atla as the CFO.
Okay, Surbhi, thank you so much for joining us with that list. Let me go across to Nigel finally, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning. If you look at the SGX Nifty and compared with the Nifty futures, we're bracing for a bit of a green start in trade today. On Monday's trading session, clearly there was a short covering bounce that played out both on the Nifty as well as on the Nifty Bank, because both of them ended higher and the open interest in fact was lower. What did the FIs do? Well, they added the shorts yet again. They added close to around 8,000 short contracts in the ratio of close to around 4 shorts for every 1 long position on. So they continue to remain net short on this index. They're buying index options as well. So they bought close to around 43,000 contracts, both on the call as well as on the put side. But what's telling you there is going to be a fight at higher levels is the way they wrote calls yet again. So more than 20,000 calls were written in Monday's trading session. Focusing on a couple of strikes, well, for the markets as a whole, there was some writing at around 17,400 put. Premium over there is close to around 70 rupees odd. Even the 17,350 put with the premiums roughly around 50 rupees. So you deduct 50 rupees from around then 17,350 and 17,300 becomes a crucial support level. But since we're seeing writing at around 17,500 odd, that's why at higher levels you're likely to see supply. So the 20 and the 50 DMA, well, they'll become crucial resistance zones. While on the downside, you want 17,300 to hold out, get done with the RBI policy and then move on. But as I said earlier, for starters, SGX Nifty suggesting a bit of a green start. Back to you.
Okay, it is. Thanks, Nigel, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. It's time for a short break now, actually. When we return, the Reserve Bank's two-day monetary policy committee meet is underway. We'll get you findings from the CNBC-TV18 MPC poll on what to expect after this short break. Stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC-TV18. To some important cues to track, the Reserve Bank's two-day monetary policy meeting is underway with the rate decision due tomorrow. 90% of participants of the CNBC-TV18 MPC poll see rates being hiked by 25 basis points. My colleague Ritu Singh joins us now with the highlights. Ritu.
Well, it looks like we're nearing the end of the rate hike cycle, but before RBI well and truly changes course, there could be one more hike in the April policy. 90% of our respondents expect that the MPC will hike repo rates by 25 basis points in this policy, taking it to a 7-year high of 6.75%. The culprit here is inflation, which remains stubbornly above RBI's comfort level. And of course, the other area of consideration for the MPC is going to be action by other global central banks, but RBI has maintained that it is guided by domestic factors. All of the respondents to our poll said that the April hike will probably be the last one in the current monetary tightening cycle, which began in May last year. The peak rates are seen at 6.75% by the majority, but after this rate hike, RBI is expected to pause for a while before it starts to reverse these hikes. So 40% of our respondents believe that we could only see cuts in the second half of this financial year, whereas a third expect the first rate cut to only be delivered in the first quarter of the next financial year. 30% expected to happen perhaps sooner. Now, RBI could also raise the CPI forecast for FY23 marginally, given the unexpected high inflation readings recently, while leaving the 5.3% CPI forecast for FY24 unchanged. Now, RBI is also unlikely to tinker with the growth forecast, although some expect a marginal lowering. Almost 30% of our respondents said they expect the stance of the policy to also be changed to neutral, but a much larger majority of 70% believe it will be left unchanged at withdrawal of accommodation because RBI may not yet be comfortable enough to signal that they are done with the rate hikes given the global uncertain outlook.
Ritu, thank you so much for joining us with what to expect from the RBI's Monetary Policy Committee meet. We'll keep updating our viewers, of course, when the decision is out. But moving on, a whole host of banking and financial companies have released business updates for the fourth quarter. Abhishek Kothari is here with the details.
Well, to begin with, HDFC Bank, robust deposit momentum continues. YOY, it's the best in last 11 quarters, and sequentially, that is quarter-on-quarter, it's the best in 20 quarters. So deposits grew by almost 21% YOY and about 8.7% quarter-on-quarter. The loan growth was at 16.9% YOY, perhaps at a 5-quarter low, and 6.2% quarter-on-quarter, which is the best in last 4 quarters. The CD ratio has declined. It is at 8-quarter low, so there could be some impact on net interest margin. CASA ratio or the absolute value of CASA, that's improved by 9.6% quarter-on-quarter, which is one of the best that you are seeing in many quarters. HDFC Limited, the loan assigned is up about 11.6% YOY and 5% quarter-on-quarter, suggesting strong AUM growth this time around. Dividend income is down 57% quarter-on-quarter, and individual loans sold, that's up nearly 30% YOY. Bajaj Finance, the AUM growth is strong despite Q4 being a seasonally weak quarter. The new loans are down down 3.1% quarter-on-quarter. Customer base that saw robust growth of 4.5% sequentially, and the AUM growth is at 28.8% YOY and more than 7% sequentially. So sequentially, it's one of the best growth that you are seeing in last 4 quarters. IndusInd Bank, the loan growth has bounced back. Deposit momentum remained the same that they were in Q2. However, loan growth at 21.3% YOY is the best in 15 quarters and 6.62% sequentially is the best in last 16 quarters. CASA ratio is at 9-quarter low and CD ratio is at 9-quarter high, suggesting that the net interest margin could remain flat on a sequential basis. Federal Bank, strong business momentum seen over there, perhaps one of the best in last 14 to 15 quarters. Deposit momentum is strong at 17.5% YOY. Loan growth is pretty robust at more than 20% YOY, and CASA ratio, however, is at 11-quarter low. M&M Finance, the disbursements and collection efficiencies are strong. Business asset momentum, that is AUM growth, was 7% quarter-on-quarter, which is one of the best that you are seeing in many quarters. Collection efficiency for March was at 105%, and for the quarter it was at 99%. Asset quality has improved and stress has come down in their balance sheet. For Bandhan Bank, the loan growth is pretty impressive and CASA improves over here on a sequential basis. So deposits are up 12.2% YOY. Loan growth is at 11.5% quarter-on-quarter, which is strong, and CASA ratio has improved on a sequential basis. Back to you.
Okay, all right. Those are all the banks or banking space that will be in focus in terms of stock today. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, a lot has happened in global markets, especially commodity markets as well. Let's get in Manisha Gupta, who's joining us with all the update. Hey, Manisha, good morning.
Morning, and thank you for that. Well, I'll start with the crude oil prices because we still seem to be holding above $85 a barrel. So 7% of gains still holding for this week. The OPEC output cut, the Chinese demand, and the U.S. crude inventories declining for a second straight month have been some of the major reasons for the support in crude prices. Also, there is a fall in gasoline and distillate stocks in U.S. also, which is supportive. And then the Japan service sector grew in the month of March, the most in 9 years. So the markets are looking at better economic data as well coming in. But the headline today clearly perhaps comes in from the gold prices, which are trading at an all-time highs yet again. We are now trading above 61,000 rupees per 10 grams for the Indian prices, and the international markets are holding around $2,020 an ounce as well. Not just gold, silver is trading at the highest in 1 year. Platinum prices trading above $1,000 an ounce. That's 2-month highs here as well. The weakness in US dollar, the US Fed may slow tightening cycle, the estimate, and the fact that the US manufacturing activity has slowed down for a 5th month are some of the factors for the flight to safe precious metals.
All right. Okay, Manisha, thank you so much for joining us. So that's all the update from the commodity markets. To some more important global updates now. Former US President Donald Trump has pleaded not guilty to 34 criminal charges. CNBC's Contessa Brewer has the latest on this.
Today was really a story of a prosecutor pitted against a former president. The prosecutor who accused Donald Trump of violating New York's basic and fundamental business laws and leaving behind a trail of money and lies. The historic arraignment began today with Donald Trump leaving his Midtown Manhattan home. He gave a brief fist in the air, arriving downtown for his arraignment in criminal courts. There were no comments to the journalists in the corridor, and we're told by those close to him that he was very somber today. Inside the courtroom, the photo that will be published in American history books just before Donald Trump pled not guilty to 34 counts of falsifying business records involving hush money payments to 2 women. The prosecutor accuses Trump here of going to great lengths to hide the conduct, creating false business records to conceal criminal activity, including attempts to violate state and federal election laws. Here's the district attorney.
At its core, this case today is one with allegations like so many of our white-collar cases. Allegations that someone lied again and again to protect their interests and evade the laws to which we are all held accountable. As this office has done time and time again, we today uphold our solemn responsibility to ensure that everyone stands equal before the law. No amount of money and no amount of power changes that enduring American principle.
Though Donald Trump didn't speak to reporters today, his legal team did.
Today's unsealing of this indictment shows that the rule of law died in this country, because while everyone is not above the law, no one's below it either. And if this man's name was not Donald J. Trump, there is no scenario we'd all be here today.
This is only one of the ongoing investigations, with potentially more significant legal consequences in the other cases for Donald Trump. You have Georgia prosecutors looking into the alleged attempts to overturn the election results, and the investigation into classified documents stored at Mar-a-Lago in Florida. It was the Manhattan District Attorney, however, who took the bold move of charging a former president with 34 felonies.
Okay, that is an important story. We'll keep getting you more updates on this one. Let's get you up to speed with some more global updates now. In a historic day for Europe, Finland became an official member of the NATO military alliance, ending Helsinki's years of a neutral political stance. The membership bid by Finland was prompted by Russian President Vladimir Putin's decision to invade Ukraine last year. Okay, from Globe, let's talk about India because COVID cases are on a rise once again. India reported over 3,000 new COVID-19 cases, with active cases now increasing to 21,179 and 9 deaths in the last 24 hours. Kerala, Maharashtra, Gujarat and Delhi are the top 4 states with the maximum active cases. In the country on Tuesday, Maharashtra reported 711 new COVID-19 cases, nearly a 200% jump from Monday's 248 cases. Mumbai alone reported over 200 cases on Tuesday, while the national capital reported over 500 cases same time. Okay, all right. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. A lot of market action coming up on Bazaar Morning Call.